2 years ago, they'd go, okay, call their
right.
next realtor, right?
Yeah,
That guy's
yeah.
crazy.
Yeah.
So you don't really know these things. Obviously we expect unemployment. They say that it will. Economists had been expecting a loss of 21.5 million jobs. Unemployment rate surged to 16%. So it's actually better than expected.
Mm-hmm.
Things are just in it's such a weird space that there's no real normal, right? So it's kind of like, oh, did rates go crazy? No, rates are low threes.
And you listen to
right?
Bloomberg and all those guys, and they're talking about the unemployment numbers, and I don't even know why they're talking about it. It's a self-created thing, right? You've shut everything down
and you're surprised
and told
them,
people to go and draw unemployment, and
Right.
you will pay them to not work, and now you're shocked at the numbers because it's a cheap headline.
Yeah, it's like ding, 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 all the news of breaking news.
Yeah.
Unemployment is surges to no. You kind of want to go
really.
Yeah. I was thinking of something else, but not appropriate right now. So anyway, let's talk a little bit about things that are affecting. Here's what I saw. I had my first one this week. Pull credit, forbearance.
Oh, good.
No, really?
Yeah.
So they're in a home right now. They're looking at making a move.
And did they need to forbear? No, not at all.
It was just a thing that was
just like,
sure, we can.
Wells Fargo reached out, he reached out to them, said, hey, I got this thing, says, hey, if in the event you're going through this, you can go. So he's like, well, I'll take advantage of it. 3 months, no house payment. Sweet. Well, now he wants to do cash out.
Why would they reach out about that? Is there fees involved? Do they get paid for that?
No, they just got, mail going out to everybody. You know how they just send out mail. Hey, I don't know. I don't know the reason why they sent it. But
they sent it, be proactive rather than waiting for people to just not pay.
Yeah.
They
just give them
a heads up that there's an opportunity there.
So he took the forbearance. So now it does show up on forbearance. So now we're dealing with underwriting. Say, okay, well, how do we address this? Credit when it was a lot lower than he thought. And here, this article was really timely in this because it said what's happening is when people are starting to see this forbearance and people aren't making that house pay, even if it's forbearance, now it's not as bad as missing a house payment, but it still shows up on your credit. They're talking about how credit card companies and everything, when they see that, they're lowering their credit limits. So you have a limit, let's say, of 10,000. Now it's 5.
Okay.
Now you owe 2,000, and now your DTIs go
ratios,
up. Your ratios are bad. It affects your credit score. So you're seeing a pretty big drop in credit scores, even with the forbearance, right? It's not going to eliminate, but if you don't,
what are you doing with the non-payment then? Are you ignoring it? I mean, as a mortgage professional, and there's non-payment there, you see forbearance. Just that in and of itself, does that impact? So if I have a $40,000 credit limit, but I don't carry a balance on that card, it doesn't impact my credit because they dropped it to 20.
Right.
Do you look at the forbearance differently?
It would be part of, if we move forward with, which we probably won't in this case, that would get tacked onto the end. So his payoff would just be higher. We would pay off.
So that's the only thing.
That's a refi that you're looking
at. Refinance.
But if you did the refi, that forbearance would go away.
Correct. Yep. So it's kind of interesting how, again, if people need it, by all means.
Yeah.
If you don't need it, by all means, don't do it.
Well, don't do anything unless you call us first and
get just kind of talk through it a little bit. He's like, hey, I was thinking I saw rates are low, and so then he said, oh yeah, and I took advantage of that forbearance deal. That was great. So I missed 3 payments, in the second. So I'm just like, but you didn't need to, dude. So I'm just like, that stuff's kind of like, come on, you're hurting yourself a little bit. And lenders are looking at all this stuff as increased risk, right? So forbearance is one. The other one that's really getting a lot of negative is cash out. You come do a cash out refinance, all the end investors have really tweaked their pricing up a little bit because they see that as a risk because you're pulling money out, your equity out.
Is there limits on that? Or
well, there are, but the rates. So even if the example they gave here, you have an 800 credit score, let's say you have a 25% loan to value. Just really low, and you just take out another 25. So you're 50%. Your rate's going to be a lot higher than it used to be on a cash out, because cash out, even though you still have 50% equity in that home, still is a risk as you're pulling money out. Just clicking that box, it changes how it looks.
So we were talking with a client about taking money out for down payment on their next property.
Yep.
And that was part of the conversation, was if you're doing a refinance or doing a home equity on a credit or something like that, that the rates are higher, right? Or
Wells isn't doing home equity lines of credit anymore. They shut.
I heard some company.
Yeah, a lot of companies are starting just to not do them. Yep, they're just going to not. Everybody's just going to let this all play out,
right?
Because they don't want to get back into a housing crisis, financial crisis,
right?
Mortgage,
which is wise.
Yeah, in some regard, you kind of look at that and go, okay, I get it.
Yeah, because like we were talking last week, and we're trying to get these stats out about the difference between 2007 and 2020 in terms of where the economy is. But one of the metrics was the cash out refinances prior to the market crash previously, and it was like $850 billion in cash out that folks had taken out back in 2007 and 8 prior to 9 and 10.
Okay.
And then prior to this year, 2020, it's been $220 billion. So it's like a fraction of the amount of cash that people have taken out of their homes.
Yeah.
And so they're looking at something like that and saying, we're not going to let you take cash out of your home right now.
Because if you've got a lot of equity, then the knee-jerk sell and bail kind of goes away. Because you're leaving a lot. When you have no equity in the property, people will walk away in a minute.
Yep. So pretty interesting. So those are some of the dynamics we're dealing with in terms of where a rate's sitting right now. 30-year fixed, still low threes. 3.25 we're locking some at 3 1/8, 3.37. All depends on again credit score, loan to value. What are we doing? All of that, cash out, not cash out. 15 years running right around 3, a little bit under. We're locking some people at 2.75 this week, 2.875 on 15 years. FHA loans again real low threes. Jumbo mid 4s, low 4s.
So the mortgage market, that tells me that yes, they're demanding a higher quality of borrower.
Yeah.
But with rates the way they are, and locking in those rates for 15 years, they still see a pretty bullish market for 15 years. If you're willing to tie up your money for 15 years at 3.5%.
Well, less than that, right?
Then you're saying, this market is going to continue through this current situation, because otherwise they would be pricing it up right now.
Yeah. You were talking, you kind of alluded to earlier, just the overall impact of that, and like the pilot I had spoke about, and from what I know with in reading in the papers about law firms laying off attorneys and CPAs and accounting firms, that they're not working like they normally would be working right now at this time of year, starting in on corporate tax returns and things like that. There's an impact there from the professional network as well, or professional businesses as well. It's not just your hospitality. It's not just your, so that's the trickle down of shutting down the economy in the way that is continuing to go on right now in most areas of the United States.
Yeah. 3.8 million homeowners have, asked for forbearance. 7.3% of all active mortgages right now. So that's
7%?
7% of all mortgages.
Oh, that's surprising.
Yeah. So it's interesting what's going on. I think rates are going to stay here. I don't see anything pushing us that we're going to go fly high. I mean, there's no motivation. There's nothing that would do that. So I like where we're at. It's just a matter of the activity getting going on the purchase side so that we get going, on that. So real quick before we go, I said I was going to ask you always every week, give me your favorite listing. What's a property that you're anxious to get rid of?
Property I'm anxious to get rid of right now is as a casualty of all this fear that is flying around, and that's really what mostly it is, and that's a detached townhome in Eagan. It's right now in temporarily off the market, but it'll be coming on again in a week or so, and that is a detached townhome for $400,000. You can call me for more information on that. But it's a great house, and then the only other thing that I'm excited about is this Maplewood house. Well, actually, I got a couple of Maplewood house and a Bloomington house, both Ramblers. I don't know why I'm getting a lot of Ramblers this year, but both Ramblers coming on, both going to be in that $250 to $300 price range. Just a sweet spot to be in. Nice places, great yards. So you can give us a call, 612-627-8000. We'd be happy to share any information about those.
Real quick, hop on to hittnergroup.com. You can look up Gina Enderline. She's in our agent section of the website. Just put a new listing on in Belle Plaine. Multiple offers, highest and best due this weekend. It's a 2-story, 1,600-ish square feet.
Oh, nice.
Nice lot, backs up to a little pond area. Fenced-in yard, great place. hittnergroup.com. See you next week.
You've been listening to your Real Estate Chalk Talk with the Hittner Group, the leaders of the #1 Coldwell Banker Burnett real estate team in Minnesota. If you want